Hey traders, John Howell here. We're going to be looking at interest rates today. I'm going to share with you some things that I'm seeing right now. Maybe we're starting to peak out with some interest rates that are coming. I'm going to share with you some things that I'm looking at there. And also I'm going to be looking at the markets, gold, silver, stuff like that as well too. So let's get straight into it. Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders. So your number one market trader here. Traders, bit of an announcement to make. It's my son's birthday, so I am running a 95% off to my Inner Circle coaching program. This is what I want you to do right now. Go to johnsfreetraining.com, or there should be very first thing in the description. Johns, Johns, johnsfreetraining.com. Go over there right now. I've actually put up the replay to the live training that I did, and then also you can get access to all the details about the actual Inner Circle coaching program. But I'm running that today. So, because it's my son's birthday, so go to that right now. So let's go have a look at the interest rates. So I have been looking at the interest rates a lot actually today. When I was doing my trading with some of my clients today, I was really focusing on what the overall market was actually doing. And we started talking about inflation. We started talking about, because the reason why we started talking about inflation is because we started looking at different commodity prices. Okay, so we started looking at corn, soybeans, wheat, cane, wood, oil, stuff like that, right? Energy, so on and so forth. And we started noticing that there's been a major shift happening when it comes to these prices, right? So if we have a look at, say, a thing like cane. Cane was actually one, and I'll get back to the interest rates in just a minute, but cane was definitely a commodity that we were, sugar cane really, but we were actually really focused on this one because one, there actually could be a trade for me to set up on actually sugar cane. But the whole thing about this is that when looking at these prices, we can see that even like with sugarcane, see how this is actually it hasn't been doing much at all, right? At all through here. It's been doing pretty much nothing. We had a very big move up. Now we're going sideways. What did that for? Yeah, now it's gone sideways. So I would expect to see something like this coming real soon, especially if we start to get a nice little breakdown bar like this, something like that, breaking past these levels through here, then we're probably going to see the movement on the downside. Things like even wheat. Let's go have a look at wheat as well too. Right, look what wheat's been doing. Let me take the moving average off the screen. But look what off the screen. My computer has a mind of its own today. So we have a move up. Look at this here, overall sideways. And then look what happened. We've come back down as well too, back to basically equilibrium through here. So we've been getting a lot of pullback, and we're talking about that today with some of my clients. And I was telling them that right now there's probably going to be we're going through a deflationary period. The Fed's raising interest rates are going up. Commodity prices are pulling back. There's going to be a deflationary period in the inflation numbers. And so we're talking about that, and we said, okay, if that's the case, what happens to the long end of the interest rates, the 30-year interest rates? Because we started looking at TOT, right, which is basically the bond market, right? So TOT has been going down, and we started talking about this, and then we started looking at different things like the 30-year and the 2-year and the 10-year, and we said that it looks like the TOT market, just by looking at this here, see what happens. Look at this. See what happens when the moving average comes down, and then it starts to flatten out like that. That simply means that the movement here is very flat. So even if we do get a bit of downside movement, we're probably getting towards the end. It's probably not going to have a lot of downside to come. Now, if we do get some sort of reversal out of this, like something like that coming out of that, then that means the interest rates are going to drop as well too. So maybe, just maybe, because it looks like we're getting towards the end of this cycle for the interest rates. Again, this is the free market, right? But so if we have a look at this here, so if I actually bring up the interest rate, say the 30-year, you can see the exact same thing that's happened with the 30-year, right? Look at this here. See how it's got the flat moving average? Remember, this is a momentum indicator. Strong moving average up means there's strong momentum behind it. Flat moving average after being strong, it says that this move is coming to an end. So I wouldn't expect to see too much out of this here. We're probably going to see a bit of a pullback coming through here. We've got a bit of a double top going on. So maybe this is the overall final hooray for the interest rates before they start to come back down again. I was actually speaking to a person that I know, acquaintance, whatever you want to call him. And I used to train with him last year. When I was actually training, when I saw him yesterday at the shops, he was actually telling me that he bought a property last year. And my only recommendation was just to make sure that he's not under the weather, meaning like he hasn't put himself under too much pressure once the interest rates go up, because they will go back up. He's a bit of a lazy ass, by the way. He asked me, he goes, "Oh, John, I'm thinking about putting money in the stock market or putting money in the property. I'm just not too quite sure." And I said, well, when you trade the stock market, you need to really know what you're doing. If you don't know what you're doing, then don't even touch it. Don't even look at it, right? So then what did he do? We went to an advisor, and then he just bought a piece of property. I'm like, he just bought a piece of property. And then now, fast forward 12 months later, interest rates have been going back up. And now he's starting to say, oh, well, just a few less cups of coffees, and then it's going to be all good. It's like, hang on a minute. Are we starting to see the cracks on the floor with these higher interest rates coming through? Because that's here in Australia, right? Overseas, you could see, obviously, we've got the overseas rates as well too. So I'm looking at this here, and say if we bring up the 2-year as well too, look at this 2-year. This 2 years we're starting to slow down a lot. And this is actually, look at this here. This is a complete game changer. Complete game. I'm not sure if you realize, but look at this here. On the 2-year, high, lower high, lower high, lower high, lower high, lower high. What's this here? Higher high. You know what's coming? Firstly, this, but then a massive bull market in the interest rates. We are going through a major shift right now in interest rates, inflation, and the way things are. You see the overall, what do they call it? The 40-year downward trend with the interest rates. Now guess what's coming? We're gonna be instead of stair stepping down, we're gonna be stair stepping up. And it's gonna be really interesting to see how my kids go, because obviously moving forward, with over the next, say, 10, 20 years, as they started getting into their adult sort of age, it's going to be really interesting to see how they're going to handle, because I remember my dad back in the 80s when the interest rates got to like 18%, I think it was, and he lost his house. So it's going to be really interesting to see what actually goes on there. So, and if I zoom in on my charts now, and I zoom in here looking at this from a technical analysis point of view, look at this here. We're actually starting to really go weak, right? And let me share what I mean here. Let me go into teaching mode here for a minute, okay? So when I'm looking at the markets, we have moves, right? We have moves up, move down, moves up. But if a move does this, if a move does this, if a move does that, see how the angle of this move. So this would be what's called. See how that's a very steep angle. It's very fast up, right? Very very strong, and then it's slowing, and it's even slower that way. Makes sense? So whenever I'm looking at the markets, I'm seeing where are the angles happening right now and what's happening. And the angles of that gives me a bit of guidance on what's happening right now. And what I mean by that is that if the market has been going strong up, that's a move there. And then we get a bit of a pullback. And then we get another strong up through here. And then we get another pullback through there. But then suddenly we do something like this. Notice how this here is a very steep sort of vertical angle. This is very, very vertical. Look at this here, very, very, very slow, right? That's telling you that even though the market's going up, the buyers are getting weak. And when that what that means is that we're possibly going to start to reverse like that. See that there? Strong up, bit of a pullback. Strong up, bit of a pullback. Strong up. We're probably getting very weak here. So you may have to replay what I just said there a few times. This is going at advanced. This is advanced techniques. Again, if you go to Johns, JOHNS, freetraining.com, you get 95% off to my coaching program. And every week I really go into advanced stuff when it comes to trading these markets. So, okay, but look at this here. And the reason why I bring that up is you should be able to see, look at this here. So we had a strong move up from there to there, there to there, even stronger, there to there, strong. Look what's happening now. Do you see the angle, right? So we went from this, we went from that, and then we went from that, then we went from that, to now we're gone from this. See that? So that means the markets ran up like this, very steep, very, very strong. Ran up like this, very, 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 very steep, very strong. Ran up like this, very, 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 very steep, very strong. Now, this buying leg, it's just doing this. What is that? That's actually slowing down. It's not as vertical, right? This is strong up, strong up, strong up, starting to slow. Why is that important? Because we now get into areas of resistance and we're slowing up. There's a major probability we're likely to see a reverse in the markets. Again, you may have to rewind what I just said there a few times to really get what I just said there. I am going a bit advanced on you right now, but when you know how to read the chart, guys, you really start to see things coming a mile away. Let's have a quick look at the stock market today. Stock market today obviously held up nicely, as I've been saying. Moving average is still pointing up. We're still holding here quite nicely, so that's actually all good there. Looking at the gold market right now, I'm expecting more downside to happen with the gold market. There is a major support level happening right now around this level through that major support level there. And the market has been coming down. Let me bring on my short-term moving average. Yeah, so the market has been coming down. I wouldn't be too surprised to see this level get flushed. This level here get flushed, and then a complete turnaround when it comes to the gold market. So there we go, traders. Hope you enjoy that, and I'll see you in the next video.